The Olympic effect gives a much-needed shot in the arm to the UK economy. Britain roars out of recession in the third quarter. Stock markets, commodities and non-core government bonds all higher today. I'm Jamie McGeever and this is today's Market Pulse. Well, let's start with those UK GDP numbers and our digit of the day, 1%. That's how much the UK economy grew in the third quarter, well above 0.6% forecast by economists. But the champagne is on ice. The economy has only recovered half the output lost in the 2008-09 recession, and the recovery is slow and uneven at best. Time for a stock check now, and it's a huge day for earnings in Europe with around 60 companies reporting. Credit Suisse says net profit more than halved due to debt write-downs. Shares heading higher today though, as analysts welcome the bank's pledge to cut costs by a further 1 billion francs. But WPP shares are down more than 2.5% after the world's largest advertising group cut its revenue outlook for the second time in as many months. Company Chief Executive Martin Sorrell says he is now exceedingly cautious about future prospects. And Daimler shares off more than 3% after it said profit margins wouldn't grow as much as expected next year. Earnings for this year also set to come in below earlier targets. Well, let's get out now to Richard Hunter, Head of Equities at Hargreaves Lansdown. Richard, let's start with the autos. And Ford is biting the bullet on a restructuring plan. We're hearing some press reports that up to 1,300 jobs may go here in the UK. Is this restructuring enough to get Ford back to profitability?
Well, it's a marked improvement from where they were just after the financial crisis, of course, and indeed the US auto industry in general, which is a quite massive market. And one of the things now that they're starting to head towards some sort of financial stable footing is to keep a close eye on those operating costs, because clearly the amount of units or cars that they've been selling, even in the last 18 months, are not anything like the levels they were seeing pre-2008. So I think this is an example, as we've seen over the last couple of years, of a corporation making absolutely sure its balance sheet is tidy, whilst individuals and indeed governments continue to suffer.
OK, it's not looking quite so rosy, though, or if you can say rosy. It's not looking so good in the French auto sector, is it? Peugeot, bad news today. There's demonstrations there. We're expecting Renault to come in pretty weak as well. Is this as bad as it gets, though, for the French auto sector?
I think, as we're seeing with so many sectors at the moment, we're getting winners and losers. I mean, clearly, in terms of the car market, if you put the Eurozone together as a bloc, then that and the US are probably the two biggest economies in the world. And obviously, with the problems in Europe, it's not surprising that a number of car makers are under pressure. That being said, the likes of Audi, for example, owned by Volkswagen, and indeed BMW, are absolutely racing ahead at the moment, particularly in their growth in China, where they've had orders of over 30% up over the last year or so. So I think there's a definite similarity with so many other sectors at the moment, where you really need to go for the inverted commas blue chips, the ones at the top of their game, while others are to some extent falling by the wayside. So
essentially what you're saying is then buy German cars, not French cars?
Well, they're the ones, rather like the economies, they're the ones that are showing the real strength at the moment. Obviously not all of them, because the Daimler numbers were disappointing today, but certainly BMW and Volkswagen are moving strongly in the right direction. OK, just let's finish up on the banks. I mentioned Credit Suisse earlier. Santander was also out today, not particularly good either. The outlook doesn't look particularly strong either. So why are European banking stocks doing so well? Is it now time to cash in on those gains? It's a very difficult time. There's no question that in terms of the risk scale, banks have moved somewhere from medium towards the higher end over the last 2 years. Again, you've got the ones at the top of the pole, the likes of HSBC, with an incredibly robust balance sheet and global diversification. And then you've got stock-specific problems, such as the Credit Suisse increase in bad debts that you mentioned, something that's fairly much under control in terms of the UK banks. But of course, the UK banks have got their own problems, not least of which is the government stakes that are being held in the likes of Lloyds and RBS. So the banking stocks in general at the moment are very much for those investors with a fairly steely nerve.
OK, Richard, thank you very much. That was Richard Hunter from Hargreaves Lansdown. That's all from us for now. I'm Jamie McGeever. This is Reuters.